In this video, I want to recap how I made a little over $5,400 profit on the S&P 500 futures using Orderflow. I want to show you a live replay of exactly what I saw in real time so you could understand my thought process, why I entered, where my exit was, my stop loss. I'm going to break down the technical aspect to this trading setup, and then I'm going to get into some psychological points of what validated it and what made it a really high quality one. Before we get into it, I recommend everybody watching this video stop what you're doing, click the link in the description below to follow me on my Instagram at amertitrade. It's a really good resource. I do these daily trade recaps every single day, along with really good trading tips and tricks that I guarantee you're not going to find anywhere else. Again, the link is in the description below, and you're really missing out if you're not following it. But now let's get right into this context. Now in the market, it's very important to put all the puzzle pieces together to get a clearer or a better picture, or it's more like cooking food, and the more ingredients you put in, the better taste and the more flavors you're gonna get. It's the same thing with the market. So it's very important to go over the previous day's auction, the previous week's auction. And in this trade setup, what's very important is the day prior, there was a very large volume sell-off which created supply near the highs, and it's safe to say sellers were factored in because of this aggressive, high volume, high volatile sell-off. Essentially, the market rejected supply in the morning, consolidated after that sell-off, and then by 1 o'clock Eastern time, we got an end-of-day sell-off for about 70 points, which formed supply at 4613, 4611, and that volume down here was kind of the telltale sign. It was a very aggressive one. Now, because of this context so far, you need to ask yourself, for the current day, and when we test those levels again, does it get accepted? That will be bullish. Or does it get rejected? And that will be bearish. This is why I say always react to the information the market presents. Never be bullish or bearish. Just go and react with the flows of the market. In the overnight session, we were putting in higher highs, higher lows, holding VWAP, which is this purple line, very, very well. And we were creeping up into this 4596 level, which formulated from this drop on that afternoon sell-off. So in the pre-market plan, I post these every single day in my Discord of setups I'm watching, levels I'm looking out for, and potential trading scenarios. The plan on Friday, July 28th, was we had two key levels. The first one was this 4611, 4613 supply zone that formed from that sell-off. And the second one was that 4595 level, which is this green line I'm hovering my cursor over right now. Scenario number one was if buyers are successful above 4595, I want to play long, targeting that 4613 supply zone, which is that first pink box. This was the plan for that day. Now the market opens up, we break above that 4595 level, and that old resistance level now turns into support. We hold it, and then we continue rallying higher. Now in hindsight, this was a very good entry point, but this is not where I took the market long, and this is not where the lesson of this video comes into play. The lesson in this video and why I took the market long where I did was there was tons of buying activity at the high. Now this is a delta on the depth of market, and the blue represents very aggressive market buying above 4605 and above 4606. There's tons of aggressive buying above 4605 and above 4606, and I'm going to replay this for you so you can understand what it looks like in real time. So the current information you see on the chart right now is going to represent this replay on the depth of the market, and breaking this down as simple as possible, what you're going to see here on the left is a volume profile split between bid and ask data. The dark blue, dark red solid columns are level 2 bid, level 2 ask. The numbers inside are recent bid, recent ask trades. Obviously, you're going to see the price. And the VPD column is a volume profile delta. It's ask volume minus bid volume. A positive delta means there's more aggressive buying at that level than there is aggressive selling. And a negative delta, or red, indicates there's more aggressive selling at that level than there is aggressive buying. And the SVP column is just adding the volume up at that price for the full day. Now remember what I said, keep an eye on 4605, 4606, as we come into this level and break the high, I want you all to keep an eye on how strong the buying is right here. Look, 1,200 lots just hit the offer, 500 lots, and look how positive the delta is turning here at 4606. Now keep in mind the context that I just have explained so far. We're above my green key level at 4595. If we could get above that, I want to play longs targeting supply. Well, I'm watching to play the market long at this moment, but I'm seeing a ton of buying near the high and how hard they are trying, but they are failing to bring the market higher. Now that usually, most of the time, indicates possible weakness. But with the context that we have gone over so far, this was bullish and I wanted to get long on a pullback. So now I just fast forwarded this chart about 20 minutes. So now 20 minutes gone by, this whole area right here where I'm moving my cursor over, and still it looks identical. There's tons of buying here near the highs on the depth of market above 4605, 4607, and that's when I updated the members in the Discord that buyers are really trying here. Now, I said, are they successful or do they fail? And we will see this with the next information the market provides us. Then about 5 minutes later, the market sold off and I said I'm in the market long at 4,600, speculating this is a stop out pullback to break the high a day and target 4,613 supply. Now the reason why I said this is a stop out pullback and not just a normal pullback where we're going to reverse is because despite all this buying, the market really wasn't selling off and there wasn't aggressive sellers stepping in thereafter. If I saw aggressive sellers stepping in or I saw some type of selling pressure formulate, then I would have said, okay, the chances of the market reversing here are high. But because I didn't see that and I saw a ton of volume here near the high on multiple tests, I'm talking about 10 or 15 minutes in a complete period that we tested this and failed to break it, I knew that if we were to pull back, many were going to get short. Many were going to stop out of their longs, and it was just going to provide liquidity for someone else to get long, whoever's building these longs, to get in at a better price, to break high a day, and then target that supply zone above. So that was my trading thesis, and that's why I got long on this pullback back at 4,600, speculating that it was just a stop out pullback and I was going to use that supply as a target. So when I got long is when the market sold off like this, and this is the pullback that I was explaining, and watch the velocity and how strong and how fast that drop just was right there, and immediately it got bought up with bids that just stacked the market and aggressive market buying thereafter. This is when I took the market long at 4,600 and I had my stop loss below that low. And you could see this volume by price, but you could also see it by time. Look at that high volume little tick right here, that 1028 candle on Friday. So now I'm in long. Eventually the market rallied about 6 points after my entry. And at this point, due to how I'm entering this trade and due to this context and due to the scalp I'm putting on, this was a risk-free type of trade because it moved in my favor and I did not want to make it go red on me. Eventually we pulled back and I stopped out of this trade for break even. I got out where I got in, didn't want to let it go red on me. And looking back in hindsight, this could have been a bad mistake, but it was a really good mistake. It was a good trade that just did not work out. Now, what's very important here is where I stopped out, I entered back in that trade about 2 minutes later. So keep an eye on where that sell-off pulled back into. This happened around 4,600, 45.99. Now, a few minutes later, the market pulls back into this 4,600 to about 45.99 level, and we held it very well. So see this pullback right here? It holds very well, bids step in, and aggressive trades hit the offer thereafter. Despite all this aggressive selling, there was a lack of downside follow through, and the same exact area where I stopped out earlier, I simply re-entered that trade with the same exact analysis. I said I am back in long at 1048, at 4601 with the same exact analysis as above. We liked how the guy was just supporting the price down there at 45.98 where we saw all that aggressive selling. So now I highlighted where I got back in long right down here at 4601, and then about 15 minutes later the market comes back to the high, and look what we did. We consolidated there for about 10 minutes thereafter. And look at the depth of market. Same exact thing we saw earlier with all that aggressive buying here near the highs. But watch when we break. I'm going to replay this tape. And watch how aggressive this break is. Now, high day broken. The buying pressure increases. Keeps increasing, right? Dips are getting bought up as we break, and we come right into my 4613 target, and I get out 90% of my position at 4613 to protect myself in case the market pulled back or just played games without a lack of volume. I held the remainder 10% of my position in case we wanted to rally higher, and I eventually got out when the market rejected the supply zone perfectly at 4610, and I got a very, very good entry on this setup, and I exited with my target. I didn't get greedy. I didn't want to hold for another 20, 30 points. I got out 90% to protect myself. I held a few contracts open in case I wanted to go up. If it didn't go up, I just exited for still a profit and maintained this. And that was a very good move because we rejected the supply perfectly. And in hindsight, this could have been a very good short. I mean, from the pre-market plan, 4613 was that area where sellers can emerge. And that would have worked very well if you didn't take the long and instead just initiated a short position here, especially putting in a lower high at that supply zone. And you could have capitalized on a 30-point sell-off. And then just to recap it, the intraday context was that the market broke above that resistance level at 4596. We saw absorption near the high at 4606 for about 15, 20 minutes. We wanted to get long on a pullback where those early shorts saying, oh, there's absorption here, let me short this. But those guys were not getting rewarded. So I knew shorts were factored in, and I knew someone was trying to buy the move. So a pullback, as long as it held, was just a good entry to build liquidity for someone looking to get into a long position. And then we were using that supply zone where sellers can emerge as a target where we're rejecting the previous day range. And we rallied up into that previous day range. And this was a very nice entry with a lower high being put in there. And this is the rejection that I'm talking about of the previous day's auction. But I wasn't not going to take the market long into that level despite finding all that buying down there. I wasn't going to sit there and say, oh, I'm not taking the market long, I'm going to short it up here. But if an opportunity arises, I'm taking it as long as I can put risk on the table. So that's what I'm leaving you all off with. If you enjoyed this video, drop a like, comment if you have any questions, and definitely check out the links in the description below. Every time I make one of these videos, I get questions about how to join the Discord and how to get the pre-market plans and commentary. The Discord is only available and it is included for free for Trade course members, which is just a one-time fee. Majority of the education is in the course, so I don't offer Discord-only access. But I'm going to end it on that note. Peace.